Hi guys, welcome back to Finpact. Also guys, don't forget that this is not financial advice. Make sure you do your own research before you invest in anything, and I've left my disclaimer down below in the description box. Also guys, before we jump into this video is sponsored by Bitforex. Bitforex has an array of different cryptocurrencies. They are a fantastic trading platform to use. There's been a lot of bearish sentiment in the overall crypto market, but I like to see it kind of similar to the dot-com bubble, which did burst in the year 2000. Now, the dot-com bubble was also known as the internet bubble. This was where we saw all internet stock prices rally to huge highs, and these were largely speculative because people were speculating on the potential of the internet and all these different companies that were going to contribute to it. Now, crypto has been slightly similar, but there has been a difference. The main difference is that the internet was an era in itself, but cryptocurrencies and DeFi builds on that. Blockchain technology tends to complement the internet. You go from Web 1, then to Web 2, and then to Web 3, which is basically the internet with more ownership and more privacy. And then you go to Web 3, which is built upon Web 2, but with decentralization and more ownership of your data. So although the pattern might be similar, there is good news at the end of the tunnel. So for example, if you take a look at some of these tech stocks, so this is Microsoft, we saw the big crash in the year 2000 and a lot of volatility as they continued to establish themselves, and also the tech industry started maturing and we got to higher points. But of course, there were other companies that became front runners, such as Amazon. So Amazon hit such a huge low back in 2000, and now, Amazon is considered one of the safe stocks. Well, I like to see that with cryptocurrencies, but it's very important that you choose blue chip cryptos with established track records from management, good blockchain technology, and a good vision as to what they want to establish in the next 10 years. And I want to quickly show you guys the short-term Bitcoin chart and where I think the price is heading in the next few days. So the current price of Bitcoin is $20,540. I think in the short term, we are heading downwards. This looks like a very bearish pattern that we're going to oscillate between these two lines till about the 17th or 18th. So that's about 7 days from now, where we could reach a low of around $18,310-ish. I've also made a short position at the current price we're at, and I'm going to be closing that order around $18,800 to $18,700. I'm going to be opening a long position at $18,500 to $600. And as we are oscillating, I'm trading in some of the highs and lows around this point because right now there is a lot of market uncertainty, but there's a bit of a battle going on between the bulls and the bears about this. But I do think that we could either see in the next few months a $15,000 Bitcoin, or we could go back up to $25,000. What I currently think about Bitcoin's price stability is largely dependent on the institutions holding their positions. If some of the big hedge funds liquidate, then we could see the $15,000 Bitcoin price that we saw at the beginning of the bull run in 2021, which is when I actually bought Bitcoin as well and made more orders. I did buy earlier, but I bought more around that point. Anyway, that's a large possibility in the next few months if we see institutions sell the $15,000 region, but I see it as an opportunity. It's the only time we can get into these prices this low. So now let's jump into the rest of this video and why I think the cryptocurrency market crash is very similar to the internet.com bubble. Here's a fantastic graph I found on Cointelegraph that will show you what I mean by the dot-com bubble and how this relates to cryptocurrencies and why you shouldn't be worried in the long term. So when we saw a lot of hype, this was basically fictitious value, meaning it was speculative. People were overhyping the prices of these tech stocks. But then later, when this bubble sort of burst, there were cracks in the hull. People were realizing all these companies were maybe not exactly on track to what they were trying to achieve at that moment in time. They realized it was very overvalued, and we saw the prices fall. Now, nevertheless, they did still pick up as time went on, and this was just in 2005. And since then, the prices have come a long way in the tech stock sector. We know they are high growth, higher risk too. And we have seen some crashes with what's been happening in the global macroeconomic sentiment, but we know that there will be recovery ahead. I mean, there always is, depending on how the macroeconomic stimulus helps us and whether they can control the inflation. Because as you can see, the inflation rate is currently very high, sitting at 8.5%. I also like to see this crypto market crash as similar to the housing market crash that we saw in 2008. I'm sure many of you guys already know this, but we saw the huge crash in house prices. If you want a whole video on the recession then I will definitely make that for you. But essentially the market collapsed and everyone was defaulting on their loans. So many people were over leveraged and banks were basically giving out these asset-backed securities that were basically full of trash. And it was this entire domino effect where people were buying these securities that were trashy, and then the securities value went to rubbish and the entire market was, well, it tanked. So it's not actually fundamentally as bad as the 2008 crisis because that impacted everyone. Right now, not everyone is exposed to crypto, but later on they may be. Now, I want to show you the chart. So when the housing market crash took place, here's a house price index for the US. We did see a dip for around 2008 to around 2012, 4 years. And remember, the economy was very different back then. I mean, this was all the banks that were impacted, people with their homes. There was a lot of exposure from pretty much every industry involved. Now with cryptocurrencies, it's different. You're not going to get the government bailing you out, but I think there is something good about this. This means that the blue chip cryptos will have to figure out ways to actually deliver the best possible product that can deliver security and the use cases that they are supposed to give, rather than this whole housing market bubble that caused all these people to have these over leveraged loans. That's one of the reasons why I've always said when it comes to trading in cryptos, it's important to use very, very minimal leverage because that involves more risk. And I've also said that personally, I like to hold and buy in the long term. And if I do make short-term trades, they are nothing that I'm not willing to lose. Anyway, back to the housing market crisis. So around 4 years it took for it to develop. Like I said, the economy was very different. They didn't have the same incentive to recover because governments were essentially bailing everyone out. Then from 2012 to around 2020, we have seen it skyrocket compared to what it was at this point. So that's what I see will happen with crypto. I do think in the long term, we will see huge prices, but we need to make sure exactly the following that they've said in this article. It says that with the crypto crash and dot-com bubble, there is something very similar, is that both share the exuberance to develop tech into problems that don't exist, excessive access to capital, we've seen that with crypto, ambitious promises with no hard tech backing them, and finally, a misunderstanding of what any of this is even about on the part of an investor. And I think that is the limitation we have seen with cryptocurrencies, which is why I think it's so important to choose fundamentally sound blue chip cryptos, those that are taking their time to develop the project in the way that will best serve the investor and companies and use cases globally. This is one of the reasons I've always been an advocate of Cardano. I do believe that Cardano's approach has been, although the sleeping giant, so yes, it's seen price crashes, but in the long term, they are going to deliver, in my opinion, a better project and sort of learn from Terra's mistakes. Even Charles Hoskinson did say that. Even Charles Hoskinson said that they were going to delay some of the upgrades to ensure that it was a much better product delivered before, because of what happened with the Terra situation. They wanted to ensure that what they deliver will be done to the best of Cardano's team's abilities. Anyway, guys, I thought I'd make this video a little different and talk about economic history and what's happened in the past and how we could potentially relate the crypto crash to it. I mean, no one knows for sure. Remember, this is not financial advice, but at the same time, we can learn from some of the things that have happened in the past. But historically, prices have always risen as there is a longer time horizon, which allows the economy to recover in that time. So guys, what do you think of this video? Leave your thoughts in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notifications so that you get informed on when I release a video. Thank you guys for watching, and I will see you in the next video. Bye!